Okay, so what if an AI could basically point you to a stock that was about to pop? It sounds like science fiction, right? Well, today we're diving into a Taiwanese tech company that's become the star pick for one of these AI models. We're going to explore how this is totally changing the game for investors trying to navigate the global chip race.
Just look at this number for a second. Over 1,000%. That's the 10-year return of the AI strategy we're breaking down today. I mean, when you see a number like that, you really have to ask, how do you do it? In a market that is just absolutely packed with companies all claiming they're the next big thing, how on earth do you find the real winners before the rest of the world catches on? Well, that is precisely the problem this AI was built to solve. To really get it, we have to pull back and look at the big picture. And that picture is the massive global semiconductor boom. You know, the demand for AI chips, which are basically the brains behind this whole revolution, it's like a tidal wave lifting the entire market right now. So let's zoom in on this specific strategy. It's called Taiwan Chip Champions. And what it does is pretty cool. This AI model relentlessly scans Taiwan's world-class semiconductor market, and it's basically hunting for just one thing: stocks that have the absolute strongest positive momentum. And you know, the results really do speak for themselves. This isn't just some back-of-the-napkin theory. It's backed by some serious data. We're talking a return of over 340% in just 5 years. And yeah, that incredible 1,000% figure over the last decade. So the big question is, who is this AI pointing a giant flashing arrow at right now? The stock that is completely dominating its picks is a company called Compeq Manufacturing. It's kind of become the poster child for this whole AI-driven tech rally happening in Taiwan. And, well, you can see why it's getting all the attention. Just look at these gains. It's up over 19% in a single month, and it's climbed nearly 40% over the past year. That is some serious momentum. But listen, a soaring price tag doesn't tell you the whole story. To really figure out what's going on, we have to pop the hood and look at the kind of technical indicators that the pros are watching. So let's decode some of this data.
First up, we've got a classic tool called the Relative Strength Index, or RSI. The easiest way to think about it is like a speedometer for a stock's price. Now, the key thing here is that a reading below 70 usually suggests that while the stock has some real power behind it, it might not be overheated or overbought just yet.
Next up is something called the MACD. I know, it sounds super complex, but the only thing you really need to know is that it's a trend-following indicator. It helps traders see if a stock's momentum is actually getting stronger or if it's starting to fizzle out, making it a really important signal for buying or selling.
So what are these tools telling us about Compeq? This table pretty much lays it all out. The signals are just flashing green across the board. The RSI is sitting at 63, so strong but not in that danger zone. The MACD is giving a clear buy signal. And get this, every major moving average, from the short-term 5-day to the long-term 200-day, is also saying buy. The trend looks solid.
Okay, so it's an obvious buy, right? Well, maybe not so fast. This is where we get to the classic investor's dilemma. On one side, you have all these powerful momentum signals basically screaming, go, go, go. But on the other side, more traditional value models are waving a yellow flag, warning that the stock might be overvalued and that it's extremely volatile. This is a pure momentum play, not a traditional value stock.
Now, to get an even fuller picture, let's look at a few other key numbers. Its price-to-earnings ratio is actually pretty reasonable at 15.3, and the PEG ratio, which kind of factors in growth, is right around 1, which suggests its valuation is fairly balanced. Plus, hey, it pays a decent 2.2% dividend. So even though it's not some deep discount bargain, its fundamentals aren't totally off the charts either.
All right, so we've looked at the momentum, we've peeked at the technicals, and we've checked out the valuation. What does all of this actually mean for you? Let's break down a few ways you could think about this.
So here are 3 different ways to approach this, really depending on your own personal style. First, if you're a momentum trader, Compeq itself could be the direct play, and you'd use those technicals we talked about to time your entry. Second, if you just want to ride the overall trend without picking one stock, a Taiwan-focused ETF could be a much simpler way to get that broader exposure. And third, for more cautious folks who are worried about that high volatility, you could always look into hedging with things like options.
You know, this really gets to the heart of it all. This whole story isn't just about Compeq. As the source material puts it, it's about riding the AI wave that's reshaping how we invest. That's the bigger picture here,
how this technology is fundamentally rewriting the rules of the investment world. Which brings us to one last really interesting question. Is AI-driven analysis becoming the new cheat code for the market? It's a pretty wild thought, and it's definitely something we'll be keeping a very close eye on. Thanks so much for tuning in.